Good morning. I have come with the module for computation of income from business or profession. In this module, I call it as module 8. Now we are going to divide that into 4 modules. 8.1 will give you the theoretical explanation how you are going to calculate the business income. 8.2 will give you the problems on computation of business income. 8.3 theoretical explanation for calculating professional income. 8.4 problems on computing professional income. So it's a small chapter and it's very simple also. I have never heard that one student saying that it's difficult. Whatever you have learned in your accountancy, with your accounting background, you can do this. But there is a format for that. That also I'm going to explain because that structure you should understand. Though you can do it without explanation or with your knowledge, with your common sense, still you have to learn the structure. So that is the idea of this module. I'm going to explain the theoretical concepts of how to compute the business income. So here you have to remember that when an SSC will file the returns, nobody would like to pay tax. So they want to reduce tax liability to the minimum possible. So what they will do for that? What they will do is they will try to reduce the income. Two ways of reducing the income. One is showing expenses which are not allowed as per the Income Tax Act. Second one is not reporting receipts or income, either increasing expenses or reducing the income. So both these ways they will try to reduce the net profit. So when you will get a question, you will get a profit and loss statement where you will get the net profit. So here you have to remember that net profit you have to recalculate because some of the expenses which are not allowed as per the Income Tax Act will be debited in the profit and loss account. We have to recalculate. Similarly, from the credit side, the income side, some items will be exempted incomes that you have to avoid. Some incomes will be charged to other heads of income. Say for example, salary income will be there, rental income will be there, income from other sources will be there. So all this we have to reduce. Then if any illegal activity, if they have earned some income, that also to be added to the business income because income tax department is not differentiating between legal income and illegal income. The consequences of earning illegal income, the other government departments will take care of that. Whereas for Income Tax Act, you have earned an income and you have to pay tax for that. So this is what I'm going to explain in this module 8.1 where I'll explain the theoretical computation of business income computation. So I told you the first step is you will be provided with a profit and loss account that is computed by the SSC and some additional information will be there. So our idea is to recalculate the profit and loss account based on the net profit provided. So first point is with the net profit we will start the computation. It can be net profit or not loss. 99% problems will be net profit only. So I am explaining for the net profit. If it's net loss, you have to reverse the procedure. Wherever we are telling add, you have to reduce, less or subtract. Like that you have to do that. But most of the cases it will be net profit only. So here you have to remember that add back the items which are debited to profit and loss account which are either fully or partially disallowed under the provisions of Income Tax Act. Say for example, car expenses is given, partly used for official purpose, that is business purpose, partly for personal purpose. So personal purpose will not be allowed. You will add back. Similarly, part-time salary given to the son who is working on a part-time basis in the shop or interest on loan given by wife. These are all not allowed. Pilgrimage expenses, gifts and charities is not allowed, or helping a poor patient, donations of any kind, reserves. Reserve is an appropriation of profit. So all these items we will add back. When you will see the format, it will be very clear. I have explained all the items. Then in the credit side also there are two types of items you have to look for. One is exempted income. Second one is incomes belonging to other heads of income. You know that there are 5 heads of income. Income from salary, income from house property, income from business or profession, income from capital gain, income from other sources. So in the credit side, if they have included part-time salary, it should be taxed under income from salary. So that has to be reduced. rental income is there. It should go to income from house property. So that should be subtracted. Capital gain subtracted. Then debenture interest will be there. Share dividend will be there. Lottery winnings will be there. Like that, all these items you have to subtract. So exempted incomes will also be there. What all exempted incomes? I told you section 10 will deal about exempted incomes. So exempted income, agricultural income, LIC maturity payment, what they are getting will be exempted. Gift from relatives will be exempted. Post office savings bank deposit will be exempted. So these two things we have to see in the credit side. Debit side, to see the disallowed items, you have to see the debit side of the profit and loss account and the additional information. Then recalculate the business income. So that will be the base for calculation. So now, so I am giving you the format for computing the business income. We will start with the net profit given by the profit and loss account. So if it's profit, we will start with profit figure. If it's loss, it will be minus. And add the expenses claimed but not allowed under the Income Tax Act. All reserves. Reserves are appropriation of profit. General reserve will be there. Specific reserve will be there. Depreciation reserve will be there. So any reserve, it is not allowed, because it's appropriation of profit. It should come in the profit and loss appropriation account. All taxes like income tax or advance income tax paid, anything like that, we will be avoiding that. Rent paid to self. If he's carrying on business in his own building, if he's claiming rent, it's not allowed, because it's his own building, he's not paying any rent. All expenses except on scientific research. See, scientific research, government is giving certain exemptions. The value allowed will be there in the additional information. So any expense other than scientific research, if they are claiming, it's not allowed. All capital losses. Now what do you mean by capital loss? Capital loss, you have to remember that. See, if money deposited in the bank, see, if it's lost from the organization, it's a revenue loss. It can be debited in the profit and loss account. But if the amount deposited in the bank, it's misappropriated by an employee, then it will be a capital loss. It cannot be allowed. This I have explained when I explained the distinction between capital and revenue. Now all charities and donations. Any charity to a poor student, any donation to, even if it's approved by the central government or even if it's approved by the government of income tax department, donation, prime minister's relief fund, prime minister's education fund, anything like that, any reserves, any donation, any charity, it's not allowed. Now, all expenses relating to other heads of income. So, if they are claiming that rental collection charges for the rental incomes, which is given on rent or some let out house property, you have to calculate the collection charges, ground rent, fire insurance premium for the let out house property. All that is disallowed. Collection charges for dividend, interest, everything is disallowed. Any interest on capital unless amount is borrowed. See, I told you usually they will say that amount is borrowed from wife, then we are paying, he is paying interest. That is not allowed. It's only an internal arrangement. But if the amount is borrowed from a bank or financial institution, it can be allowed. Any personal expenses for traveling, for going for pilgrimage, dining out with the family, entertaining the guests, all that is personal expenses, not allowed. Any depreciation if wrongly debited. Usually depreciation, what we will do the treatment is, whatever the value debited in the profit and loss account, we will disallow here. Next level, actual depreciation value will be there in the additional information. That we will subtract. So that is the treatment. Depreciation, whatever is debited in the profit and loss account, we will disallow here. Next step, we will actual depreciation value will be there in the additional information, that we will take it as a that amount we will adjust, subtract from the profit. Now gifts and presents. If it's for advertisement, it is allowed. Gifts and presents, if you are giving for any other activity, it is not allowed. Then any type of fine or penalty. Sometimes you may not have filed the income tax returns on time. Sometimes you may have to pay penalty for customs violation. Sometimes you may have to pay penalty for the traffic violation. Any fine or penalty, not allowed. Any payment to a partner as salary, commission, interest or bonus, not allowed. If you are paying partner salary, commission, interest and bonus, it's not allowed. Any salary or interest payable outside India unless TDS is deducted at source. It's very important that If you are getting a foreign income, tax deducted at source should be there. Then only we can allow this. Next is past losses. Past losses, this is not the profit and loss account statement cannot adjust the past losses. We have to remember that set off and carry forward loss is there. That is after learning all the from the gross total income, after learning the gross total income, after learning the deductions and all, before computing the tax liability, this adjustment we have to do. That we will do it as a separate chapter. So that you have to, we will not allow here. This is because this is computing the business income from the profit and loss account through the provisions allowed by the income tax department. So past losses will not be allowed here, but it will be adjusted later. Similarly, salary paid to self or any member of family for casual help. Usually proprietors will claim that son is working or daughter is working part-time or wife is working part-time. We are paying salary. It is not allowed. Now personal life insurance premium, it is not allowed because it's personal expenditure. It is not for the business. Any amount invested in savings, it can be in LIC, it can be in any bank investments, any investment, it can be national savings certificate, any sort of savings, it's not allowed because we are considering, we are debiting the expenses which are related to business. Now rent for residential portion. If the building is a combined one where one portion they are living and one portion they are doing business. So if residential portion, if they are claiming any rent, it is not allowed. Speculation loss, it cannot be allowed. Speculation loss, if you are involving in speculation activities and if you are incurring any loss, it cannot be allowed. Bad debts still recoverable. So that is also not allowed. Actual bad debts value will be there in the additional information. Just like the depreciation adjustment, we can adjust that also. Legal expenses. Legal expenses can be for anything. Any legal expenses, that is not allowed. Maybe for fighting a case in the court, they have violated something, business organization has violated something, like that the legal expenses incurred, not allowed. Now, loss by theft from residence. So it's a capital loss. I told you. See, when I explain capital and revenue, I have explained it clearly. If the money is lost from the business unit, then it's a revenue loss. But if it's lost from residence, it's a capital loss. It cannot be allowed. Then expenses on illegal business. Any illegal activity you are doing and if you incurred any loss, it is not allowed. Employer's contribution to unrecognized provident fund. We have learned 4 types of provident fund when we learned salary chapter. Statutory provident fund, recognized provident fund, unrecognized provident fund and public provident fund. So unrecognized provident fund, there is no recognition. Employer's contribution to unrecognized provident fund is not allowed. Now difference in trial balance. This you have to remember because other items usually you can relate with the accounting knowledge. Difference in trial balance and difference due to under crediting of stock. This also will be disallowed. Now cost of patent rights, technical know-how and preliminary expenses being capital expenditure. We are considering only revenue expenditures. For that year, what all revenue expenses they have incurred. See, if you are buying a patent right, technical know-how or preliminary expenses, we are expecting benefits for a number of years. So that is capital nature. That cannot be allowed here. So from the net profit, total of all these items which we disallowed, we will add to that. So that we will get a figure. Now from this we will deduct the certain values. Deduct items which are allowable under the Income Tax Act but not debited to profit and loss account. 2 items I have already mentioned. One is depreciation, one is bad debts. So actual bad debts not debited to profit and loss account, then actual depreciation. Then any other expenditure incurred as per the provisions of law. So if it's given that it's allowed as per the Income Tax Department, it will be there in the additional information. Then this you have to remember, difference due to under debiting of stock. This item will be there usually in the problem. Under debiting, over crediting. So this you have to remember where you have to adjust. Now net profit, you added disallowed items, you subtracted these items which are actually allowed. Now you will arrive at a value. Now from this, these two so far information you have collected by debit side of the profit and loss account and additional information. Now it's the time you have to check for the credit side of the profit and loss account. So deduct from the above total any income which is either exempt or not taxable under this head of income. So I already told you 2 types of incomes. One is exempted income. Second one is incomes taxable under other heads of income. So incomes exempt from tax. Already we have learned in section 10. What all are exempted incomes? Post office savings bank interest exempted, agricultural receipts exempted, gifts from relatives exempted, income tax refund exempted, bad debts recovered and disallowed earlier. Now, life insurance maturity amount, it's exempted amount, it's not taxable. Any capital receipt, if they're getting any capital receipt, it is exempted. Withdrawal from public provident fund, that also you should consider. It is not allowed. Now, income taxable under other heads of income. See, part-time salary, it should be taxed under income from salary. Interest on securities, it should be taxed under income from other sources. Rent from let out house property, it should be taxed under income from rental income, house property income. Capital gain should go to capital gains chapter. Dividend, bank interest, casual income, it should go to income from other sources. So all this we have to subtract. Now total of these items is deducted from the last total to get the taxable profit from business. So we started with net profit, add the disallowed items which are debited to profit and loss account. From that, less actual expenses allowed as per the Income Tax Act, depreciation, bad debts and all. Now again reduce that from the credit side, exempted income and incomes chargeable to other heads of income. Now the last step is, if you have earned any income through legal or illegal means, you have to add back. Why? The reason is, see, there is no distinction between legal income and illegal income for income tax department. Even if you have made an illegal income, you have to pay tax for that. The consequences of violating the law, the other departments of the income tax department or the government will, central government will take into consideration, that you will get the punishment according to different acts. But here you have to remember that if you have earned an illegal income, you have to pay tax for that. So that also will be added, and that will be the final value of business or profession. So here, taxable income of business. Now you have to remember that usually I told you the actual rate of depreciation will be given in the additional information. But in case it's not given, I am giving you the statement for calculating the rates of depreciation. Usual case, the actual value will be there. So you have to remember this also. These are the name of the assets and rate of depreciation. These are the rates allowed by the income tax department. All buildings used for residential purposes, 5% they are giving. All buildings not used for residential purposes, that meaning if it's commercial building, 10%. Purely temporary erections, that meaning, see, sometimes for fair, for temporary festival and all, they will erect something. Just a temporary construction, that they will get 100% depreciation. Now plant and machinery, they will get 15%. Bus, lorries and taxis, they will get 30%. Computers will get 60%. Library books, 100%. Furniture and fittings, it's 10%. Intangible assets like patents and know-how, it is 25%. So we have to remember that. So this patents and know-how purchase, it's not allowed because it's a capital expenditure. But you have to remember that if this item is there, actual depreciation of 25%, you have to provide as depreciation. So that you have to remember the percentage. So I hope that this is clear to you, what I have explained, how we are going to compute the business income. So from the profit and loss account, we will recalculate. From the net profit, we will start, add disallowed items which are debited to profit and loss account. Less items allowed as per the Income Tax Act, like depreciation, bad debts and all, actual values. Now less exempted income and incomes belonging to other heads of income. Then add illegal income, if any. So then that final value you will get as the taxable business income. So always when you will see the problems, when you will do the problems in the next module, you can see that whatever assessee has claimed will be a small amount. But when you recalculate, it will be a higher amount. So you have to pay more tax for that. So that is the idea of recalculation. That as per the income tax rules, we are recalculating the business income. And just very, very simple calculation. Only 2-3 things you have to remember. Difference in trial balance, under debiting of stock, over crediting of stock. These items you have to remember where you have to adjust. Then this calculation is very, very simple and you can score maximum marks. It's sure question and you can get the correct answer for that because it's very, very simple. We are going to explain the next module where I will explain the problems. So see you with the next module. Thank you for watching and listening. And this again and again, if you have any doubt, you watch the video and you learn this. Thank you.